The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We looked at the DAX index. As you can see here, we've got a completed pattern. Whether it goes from here, we will have to wait and see. The next one, you'll see a picture of a beautiful t-shirt that one of our folks here at TFNN has sent me, and it's also from my good friend Jim Twentyman. And Jim Skyped me last night to tell me that his mother had passed away. She was 94, and she died on his father's birthday. He died, about 40 years ago. He was rather young. He died of a heart attack. And then Mrs. T remarried about 15 years after that. But I have to tell you a great story. She came to visit Jim in during the time when we were at Drexel. And right at the beginning of 1982, she came out to visit, and Jim was living in his bachelor pad. He lived right on the ocean in Santa Monica. He had a really cool place there, but he had no place for his mom to stay. And of course, she was really close to the family, so Mrs. T stayed with us in Westlake Village. And she had a high school friend from Westlake Village that lived there, and they were from Homer, New York. That's where they were from. And her husband was involved with a little company from UCLA, and guess what? She said she was going to put $10,000 into that company. That was back in 1982. She bought the stock in 1982, and you're never going to believe what it was, boys and girls. You're going to, no, much better than Softy. Hold on just a second here. Let's put this up here. You'll notice here, this is Amgen. It doesn't show the stock splits here, folks, but Jim said that she lived off those dividends for just the dividends, and it split, I think, 3 or 4 times, but it was at $3.50 a share. It was originally a stock. It was in Westlake. It was in Thousand Oaks, and Thousand Oaks and Westlake Village touch each other. One is in Los Angeles County, and then Thousand Oaks is in Ventura County, but they're the same. And but anyway, that was pretty good. Yeah, but there's the hard work. Defy human nature, do the work yourself. Anyway, the other good part about this is Jim has an older brother, Lee, and Lee is a spook, folks. He's worked for the CIA, or he's retired now. Retired 15 years ago. And believe me, he does not even mention that he works for the government. He lives in, I'm not even going to tell you what city he lives in. He lives up in the mountains out in the west. And Jim and I went there to visit him once, and believe me, he's got two German Shepherds bigger than me, and security like you can't believe. It's just amazing. He spent his whole life with the government in areas where we really don't want to talk about, but really strange fellow. But that's what he did. That's what he wanted to do, and that's what he did. Anyway, totally different than JT. Let's move on to the markets, folks. We got a lot of things happening here. Let's take a quick look. We've had 2 questions about 2 stocks that we've been following. First of all, we want to take a look at Facebook. If you'll notice here, we did get that 382 retracement in Facebook up to that 188 level, came down, tested 170 again. Folks, this stock is not acting very good. It looks very negative because of the lack of a bounce. It has virtually no bounce at all, none. So I think that's important to sort of pay attention to that. Another one pretty much in the same realm is the Tesla, and we'll put this up to take a look at it. Oh, by the way, on a programming note, we're going to have one of our favorite people on today. Stan Harley will be our guest at the half hour from Stan Harley Stock Market Cycles, and we'll be able to chat with him about some of the fun things that are going on in the market. But as you can see, Tesla also rallied exactly to the 382 and has been unable to get anything above that 325 level, which would be a level that would tell us that you'd be looking at it. And someone has asked me to put up the Amazon chart. I certainly can, Mr. Peak, if you'll bear with me 1 second. I believe I have it here somewhere. I thought I did. I thought I did Amazon. Maybe I didn't. Oh, shucks. Just a minute here. I got so darn many of them. I don't know which ones are which anymore. Here's Apple. Let's do Apple first, and then I'll do Amazon. So I got to cover them anyway, so I'll do them one at a time. Here's the here's Apple. You see it's in a runaway run. I don't know where it's going. It's just going higher than I ever thought it would go, so I'm not going to be concerned too much. I'm not involved with that at all. And the other one I wanted to take a look at here, if you'll bear with me 1 second here. I hope I thought for sure that I had the Amazon here, but I didn't. I guess I don't. Let's try it one more time. Oh, there's the zone. Hold on, here we go. And here is Amazon. We'll get up here and take a look at it. It's had a huge move yesterday, another big ABCD move to the upside. But remember, folks, this is something from our good friend over at Bloomberg, our friend Mrs. Robinson's son, Marshall, sent in a really nice chart, a graph, showing us that who's been carrying the ball for the NASDAQ. As you can see, Amazon is 242 points of the 581 points. Apple is in there, Google and Netflix, but Amazon is certainly, one of the bigger moves in these things. Someone asked me a question by email last night. Have I ever bought any of these famous stocks? Yes, I bought Google on the day that it was brought out in August. I believe it was August of 2004. I was getting ready to go to Las Vegas. It opened at some ungodly figure like 115. It pulled back to a 61% retracement, a tad under $70 a share. I bought a grand total of 100 shares. I got on the plane to go to Las Vegas. I got off the plane. It was still trading. It was back at the high. I bought it at just a little under 70, and I'd made $50 a share, and I got out of it. So anyway, I was day trading it anyway, so I was not expecting any more because I bought it on a 61% retracement, and that was the reasoning behind it. So that's the main thing. Folks, there's a lot of things going on the internet about the Dow going to 30,000, and frankly, it could actually do that. Let's take a quick look here. I don't believe that it's going there, but some people think this is the reasoning behind it. I've posted this chart before, and we've talked about it. All I did was I added this last swing that we just put in there that takes us up to 34,400 in the Dow Jones. We're now at 26,124. We've not taken out the highs as of yet. But you can see the ABCD structures here. Since 2008, we've had 3 major corrections. We had a 2,500 point correction in 2011, right at a 382 retracement. We had a 3,000 point correction in December of 2016. That was a big ABCD buy pattern. I mean, everybody saw that one. And now you can see what happened on election night. It looks like nothing even happened, but we were down 800 points that night. And now this is where we are. I'll cover the rest of it when we get back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've posted the chart of the, I haven't done that yet. Let's do this. Let's do the Dow. We'll do the E-mini S&P. This is the E-mini S&P since the middle of August. You can see the low down there on August the 15th. We made a 38% pullback. As you can see, they're at 28.45. The ABCD completed maybe yesterday at 29.15. I don't know if it did or not. All I wanted to do was to take a look at what I think is the real market. This is the New York Stock Exchange Index. This is the real market. And you can see we're not even close to a new high. We've exceeded the 61% retracement, but as you can see, the NASDAQ has gone, ballistic, which is pretty much is what it's been doing for quite some time. But those are just a few stocks. So that's my opinion, and I'm sticking to it. And, if we're really strong at the end of this week, we got 2 more days to go. It doesn't look like it's going to turn down from here. But if we close really strongly today above 26,100 in the Dow, I will have to throw in the old bearish towel and look at something a little different. All the other positions we have are working really great, but this one, we're going to see what happens. We went short yesterday in this, and whether it's going to work or not, we sold it right, but whether it's going to continue working, we don't know, but nobody else does either. That's what we're looking at here, watching. The gold and the I still think we're in a possibility of a nice little move in the gold market. If we could just get this gold market to come down one more time down here to this $1,200 level, that would be a beautiful 382 retracement, a beautiful ABCD pattern, which Gartley always said, buy that first big ABCD in a down movement with a 15-minute chart, the way gold moves. That would be a very significant ABCD pattern at the $1,200 level, maybe just a tad under, so we'll see. Now, when we start talking about the fundamentals here, about deficits and all this stuff, folks, that's beyond my pay grade. All I'm doing is looking at the price patterns. That's what leads me to where I am, and that's all I can tell you. I can understand what's going up and down. Why they go up and down, I have no clue. Don't want to know, don't care to know. All I know is that when they're going up, there's more buyers. When they're going down, there's more sellers. And if you can find a place to trade where you can protect your risk, that's something that you ought to sort of hang your hat on. That would be something that I think would be pretty good. We've had a question from one of our listeners over in Hong Kong to take a quick look here. Rhetorical. I don't even know what rhetorical means. Let's take a look here. You'll see we made a 3 drive to a bottom pattern at a 1.618 retracement there on August the 19th. We've had a really nice ABCD rally in this one. So whether this is going to be continuing to go down or not, any move above 29,000 in the Hang Seng Index in Hong Kong would, I believe, turn this this trend up. But it's got to get above that. So above 29,000 in the Hang Seng, then you'll have a better chance at something that could be, really interesting, at least from a standpoint of looking at a market that has a chance of turning. Now, we've had a question about the copper market because, we've had some tariffs and stuff moving around. You notice that we had a nice bottom down there in copper at the 255. We rallied up, made a beautiful Gartley ABCD pattern down at 262. We completed an ABCD pattern up at 275, which was a really nice 135 pattern going way back to the end of July. And now what we're doing is we're completing another ABCD pattern just like we did between the 21st and 23rd of August. This is an hourly chart. Here we are over another 3-day correction coming in where there should be some good support somewhere between 266 and 267 in the copper if it's good. Now, if it gets above that 275 level, then copper could have legs. But right now, it's still in a downtrend, and whether it's going to have much more of a rally from here remains to be seen because we're at a really critical level to see if this is going to hold this level or not. We have to pay close attention to that, absolutely, without even any doubt at all. I wanted to talk just a little bit about the gasoline futures. I want to get these up here because we're talking about seasonals today. We've made a beautiful pattern here. As you can see, we're equal patterns now. We're up at this 212 per gallon area. So this is going to be very, very important here because of the symmetry that we've had during July and what we've had during August. We now have lower tops, we've had lower bottoms, so we still have a price objective possibly coming in here at $1.90. Remember, we're ending up the strong seasonal period because the Labor Day weekend ends the summertime, and that usually is the peak of the driving season, so there could be some selling just because of that. We mentioned it last couple of times, 20-year natural gas chart. I don't think so, my friend. I will double check, but I really don't believe I do. Give me a second here to double check. No, I know I don't because I don't trade natural gas that often, even though I'm full of natural gas. Hold on one second. I want to get this up here and take a quick look at it and get a monthly chart here. See how far back we go. You said 20 years, shut the front door and raise the rent. By golly, I do, Peak. Wow, I sure do. In fact, I've actually done work on this chart, believe it or not. Let's put this up here, and you'll see that, wow, we got all the way up to $15 one time in natural gas. That was right before the big drop that we had in 06 and 07 and 08. Anyway, that's what we're looking at. We're in a real strong area of support right now. We need natural gas to get above $3, and then I think you got a chance to have some pretty good movement here is what I would be looking at if nothing else. So pay attention to that one. But I think there's greater opportunities here in some of these other things, folks. I don't know if that ABCD pattern in the S&P is going to be any good or not, but it hit it exactly. The number was 217. The high was 217 and a quarter, I believe. We're trading at 29.08 now, so it's down about 8 points, but no big deal. So we'll see. Now, the question that I've been asked twice this morning already, and I don't have the answer for it, but I'm going to try to give you what my opinion is on it. And this is the Canadian dollar. As you'll notice here, hold on just a second. This is the original chart that we were looking at showing that the Canadian dollar was to be heading down lower, down to that 28.70 level. Now, what's happened since that time is the fact that the Canadian dollar has not quite reached those price objectives, and that brings a real interesting. Now, what I have to do now is find the darn chart, and I thought I had it lined up, but son of a gun, as I expected, here they come. I found it. There we go. I'm getting a little better in my old age. Here's the Canadian dollar as we bring up to date. You'll notice that we were looking for it to come in at around the 28.60. Well, we got to 28.85. We got it within 20 pips of the 61% retracement, and now we've had a little bit of a 3-day rally. You'll see the smaller ABCD pattern that's there. That could be the bottom. I don't know, but if we get above the 130.40, that will be the bottom. We're trading near 130 now. We haven't quite hit it yet, but we're getting close. But above 130.50, that would turn it. Now at the break, we got Stan Harley, so don't go to sleep now. Stan's coming up. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Stan Harley of the Harley Stock Market Letter on the line. May we live in interesting times, my friend. How are you, Stan?
We do indeed, Larry. Good morning. Good morning.
What are you seeing, buddy? Tell us what you're seeing in the stock market.
Yeah, when you and I spoke before, I thought we would see a high right around August the 7th, and then from that point we would turn down. And my reasoning at the time was we talked about the primary cycle in the stock market, which I found averages about 35 weeks. And that cycle is typically composed of 4 distinct trading cycles. Mm-hmm. And I thought we would peak out in the 3rd trading cycle.
Mm-hmm.
However,
well, Stan,
since then
we actually topped on that day exactly, and then we went down for 5 days. Of course, we went up, but
you're right.
That was okay.
Yeah, we did put in a high then, and we made a low on the 15th of August, and then we've since gone higher. So clearly, we're going to peak out in not the 3rd, but the 4th trading cycle. And I've identified the time period next week, right around the 6th of September, give or take a day or two. And I think that will be the peak in this current trading cycle. Got a number of Fibonacci relationships that are actually more compelling than that August high. For example, if you count 144 trading days from the low we saw back on February the 9th, that lines up with September the 6th. If you count 152 and a half, and that's 1/4 of fib number 610, that also lines up with September 6th. Just a number of relationships, time cycles, and fib counts all line up with September 6th, plus or minus a day or two. So I think that will be the high in this 4th trading cycle. It'll also be the high in this current 35-week cycle. And from there, I believe we will head lower into about the October 8th time period. And we should flush everything out, work off the overbought condition, and set up the process to go higher once again.
Stan, we have a question for one of our listeners, and that is, we have an anniversary date coming up from September 3rd of 1932. Do you use anniversary dates at all in your work?
No, I don't. I'm mindful of it, but no, I find
I've never seen them work myself. I've never had any luck with
trend changes around something that occurred 90 years ago, 85 years ago. This would be more coincidental than anything. Yes, I do see a high coming around September the 6th, but the fact that we had a high on September 3rd, 1932 is, for me, academically interesting. Mm-hmm. But there really aren't the time cycles, the shorter term time cycles. Now, from a longer term perspective, I'm looking for a major peak, a la 1929 style peak, 1835, 1720. I'm looking for a peak of that type in January 2023.
2023, okay.
Yeah, but we've got another 4 years before we have to be concerned about that.
Okay. Now, you've got a section here in your newsletter where you're talking about glaring divergences with the S&P 500. Could you explain to the folks what you're looking at here?
Yes. By way as a backdrop, we've got clear evidence of right translation, Larry. The 3rd and the 4th trading cycle have all gone higher off the April 2nd bottom. And because price has peaked out to the right of the midpoint of that 35-week cycle, then we have clear evidence of right translation, and right translation means bull market. Had we had left translation, that is, we would have peaked out in the 1st or 2nd trading cycle and we were going lower, why that would be evidence of left translation and indicative of bear market structure. But no, we got bull market structure. In this move up, we've seen the NAS, we've seen the transports, the Russell, and the S&P. I actually focus on what I call the Big Five, which is the Dow Industrials, the Dow Transports, the S&P 500, the NASDAQ comp, and the New York comp. And I look for confirmation/divergences among those 5. If one were to include the Russell, I suppose you could call it the Big Six, but I tend to focus on the Big Five. And as I said, the S&P and the NAS and the trannies have all gone to record high. The Dow, interestingly, has not gone to a record high yet. And more importantly, the broadest index of all, the New York Composite, is really lagging. So while some people are sitting around rubbing their hands with glee that their stocks are going to a new high if they're holding a NASDAQ or an S&P related stock. If you are a typical stockholder with something in the New York comp, you're not at a new high right now. So, as this bull market progresses, there's a push-pull. I don't place a lot of importance on that, but it's interesting to note that the broad market, as measured by the NYA, is certainly it's only recovered about 50% of the January-February decline.
I understand. Now, we've seen these NASDAQ stocks, the FANG stocks and Microsoft and, some of the really big names, Netflix. They really, they're so heavily weighted because they're so highly priced. I mean, that's gotta skew normal distributions, doesn't it? I mean, because they're carrying the weight of this move. I mean, someone told me that it was like 85% of the move that we've had since January is basically, Apple and Amazon and Microsoft and Netflix and Google. I mean, that's pretty much the whole ball of wax. The others are not even, some of them are doing okay, but most of them are, just doing just normal things.
I think there's some measure of truth to that statement, Larry. I haven't done got out the magnifying glass and looked at that aspect in particular, but I think that's probably true. And as I said, the New York Composite, which is the broadest measure of the New York stock market, has only recovered about 50% of the January to February decline. Once this market bottoms out in October and heads higher into the early part of next year, I think you're going to see the broad market pick up speed. And it will close in. It will narrow the gap on the S&P and the NASDAQ. The NASDAQ will probably continue to be the leader all the way up into early April. But I think you'll see the NYA close the gap on the S&P 500.
Stan, when you were on last, you were sort of friendly to the bonds, and they have been moving up. Are you still friendly to the bond market, that we've got some more to go to the upside?
I am quite friendly to the bond market. I think bonds are going to trend generally higher, along with equities, for another 4+ years. I'm looking for a major asset peak across the board in the latter part of 2022, a little over 4 years from now. I think bonds are participating in that, and bonds are going to head higher. In the short term, yes, bonds are heading higher. They seem to accelerate on the upside on the days the stock market pulls back. So. They've been creeping up here. I would look for them to pick up speed after September the 6th. For a month there, when the stock market goes into some general decline, I think bonds will pick up speed on the upside.
Stan, could you stay with us for just a little longer? I'd like to ask you a couple questions that have come up here that folks are asking. Stay with us, please.
Absolutely.
Okay, Stan Harley of the Harley Market Letter. We'll be right back, folks. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Stan Harley, the Harley Stock Market Letter. Stan, I don't know if you can answer this question or not. It's a little weird, but the person's asking about your work ethic. When do you start your day, and when do you do your calculations? Do you do that at the very end of the day? Can you tell us a little bit? Can you answer that question, and would you?
My pleasure. I live in the Phoenix metropolitan area, Chandler, to be exact. Used to live in California. I lived there for about 35 years, and just about 11 months ago, I moved to Phoenix. Like it here a lot. Beautiful weather.
We're glad to have you.
And you're right down the road there in Tucson. I know. I get up a few minutes before 6 a.m., about 10 to 6, and I usually put in a pretty long work day. I do my analysis throughout the day. I'm trading myself. I'm also a professional money manager, so I've got client money to manage. But I'm doing my analysis constantly, and I have a couple of publications I produce, a monthly letter and a biweekly report, so I've got to do the analysis and write those. It's a busy day. Every other day, I try to get some exercise. Yesterday, I worked out in the gym. I ran 4.5 miles, and I try to do that every other day. It helps me stay fit and also deal with the stress that this business invokes. But I enjoy it. This is my juice. It's all I do. I love it.
Well, 4.5 miles. You use a motorcycle with that, or?
No. I'm
Stan, what are you about? You 73 or so? How old are you?
No, I'm 65, Larry.
60? Oh, you're a lot younger than I thought. Sorry. Well, I'm glad for you. This is good. Anyway, Stan, the other question is, how do you figure your price calculations? What when you're looking at price levels, what do you use for price calculations?
Analyzing the market is a two-step process. One, I analyze what I think is going to happen on the x-axis. That's time. The other element is analyzing what I think is likely to happen on the y-axis, which is price. Analyzing time is very difficult. Analyzing price is a bit more challenging. I use 3 things, Larry. I look at Gann angles off of high and low pivot points. I use what I call price octaves. And last, but certainly not least, I use Fibonacci relationships. And I kind of put them all together, plot them on the charts, show them in my publications, and from that I glean my expectation about where I think we should see in high or low.
Okay, that's close enough. Well, listen, I want to thank you for joining us. We'll have you on again if you don't mind. And how would the folks reach you, Stan? What's the best way?
Probably they can log on to my website, which is harleymarketletter.com.
Okay, well, listen, thanks for joining us, my friend, and hopefully I'll get to see you one of these days when the monsoons slow down, which is about another week or so. We should be free and clear with wonderful weather up until about May 1st, I think.
Absolutely. Absolutely.
Hey, thanks for joining us, Stan. We really appreciate it, and we'll be talking to you soon, okay?
Thank you, Larry. My pleasure.
It's my pleasure to have you on, my friend. Okay, folks, let's take a quick look here at a couple of things that we haven't quite covered yet that I think are relatively important. And one of them, of course, here is I wanted to bring up the price of Microsoft because it's got a very unusual pattern here. As you can see, we've completed this butterfly pattern. Actually, it's a perfect butterfly pattern with the ABCD structure coming in here at the 112 level. As you can see here, we've had several major ABCD patterns here going way back to January, and we've gone from 61, 81 all the way to 112. So we could certainly have a little bit of a correction here, maybe even one down day. Boy, that would really be surprising to everybody, wouldn't it? Shut the front door and raise the rent if that would happen. We'll have to wait and see if that's going to occur, but that's what we're waiting to see, if it is in fact going to happen. One of the questions that someone is posing right now is the talk that we had about Facebook and also Tesla. Both of those stocks were acting the same way. They had big breaks. They were only able to rally back to a 382 retracement, and that's another sign that telling us that we should be looking at something that would probably head lower, would be my guess. They're weaker than market stocks, which is very important. Let's take a quick look at the gold market. The last time we talked, it was trading around 1211. If you remember, we were looking for the price to possibly get down to 1200. We've hit 1204 and change, so we're very, very close to that 382 retracement down here at 1199. That is going to be an ABCD structure. It's also going to be a 61% retracement off the low that we made on the 23rd of August. So pay very close attention to that. Now, if you got the memo about going short, up there at that 1211 today, you've made your first profit objective. And so what we'd be looking for now is a place to go long somewhere around that 1299 level, but we haven't quite hit it yet. Now, if we get it down to 1299, folks, excuse me, 1199, we're going to be down $17 from the high. And that's right at the, the 1/2 the harmonic number in gold, which is, right at $17 or $18. So that should be pretty important to pay attention to. But right now, we're only trading around that 1204 level, so we'll keep, actually we just hit 1205 with our low has been 1204 right on the money, so we'll see. The euro has also completed an ABCD pattern that is very, very interesting, so we want to watch that one closely. The other one that looks really interesting that we talked about earlier in the show, and I'll bring this up so you can take a quick look at it here before we come to our break, and that is the crude oil market. And I'm going to post the chart here of October crude because you'll be able to see the multiple ABCD patterns up here at that $70 a barrel level. We did take out the high of August by about a massive 2 ticks. There weren't many buy stops up there on that one, folks, and it was right at a double 1.618 expansion number, and that, as we know, is always something to pay attention to. The reason why that is so important, folks, if you take a look at the spiral mirabilis, which is the chambered nautilus, this is how these things move around, and when you look at this, you'll notice as the prices expand, starting in the middle there where that H is and how they expand, D, E, F, and all the way back, all the way out to A, which would be the 1.618 expansion. The reason why that's important from a technical basis, from what we're looking at it, if we get to 1.618, look out, there's nothing else out there but the wild blue yonder, and you don't want to be caught in that area. So anything beyond 1.618, if you're a Fibonacci person, you don't want anything to do with that unless you're, of course, on the right side of it, and then you're welcome to ride it up. But if you're looking for a market to stop at that A point and it's at 1.618, that's it. The line is in the sand, as they say, and if we get beyond that, that's not good. And this whole business is about risk control. It's not about how much money you make. It's about how much money you don't lose. And that's the key to pay attention to this. So pay attention to that. It's very, very important as we see this coming along. Oh, we got the break coming up already. And that's about it. Tomorrow we've got Friday. And boys and girls, a big announcement. I'm giving everybody the day off on Monday. So take a day off and enjoy your family and do something good for a veteran. And I think we'll all have a wonderful weekend. And stay with us for the end of the show. I got one more important thing to cover, and we'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got the gold down to 1202. If you pay attention here in the Tiger Den today, you notice that Mr. Z was in there selling the gold, told exactly where to sell it and exactly where to put your stop. He's now using a 1205 trailing stop. Really great. Hats off, Mr. Z, to you. We're getting really close to that $1,200 $11.99 area. That should be some pretty good support. We're also breaking down here in the November soybeans again. It's having some more of a sell-off. The wheat's still acting beautifully. However, the soybeans looks like we're heading down to about the 823 level. There's a big 3 drive to a bottom pattern there in the November beans. I posted a chart for the Dow Jones Transportations. As you can see, 3 major patterns, double top, 3 drives to a pattern and a butterfly pattern. If we look at the IWM, same thing, massive triple butterflies, double ABCDs, a lot of things happening in here. It's the NASDAQ that's going wacko. So this divergence may or may not mean anything. Frankly, I think it means something. Canadian dollar, very, very close to the 130 level, but we need it to get above that 130.40 level for it to think that the trend has changed. We're not sure yet. It missed the bottom by about 15 pips, and at least on the second target, the first target, it made it, but that's what we're watching. So we'll see. It's up about 100 pips from the bottom. That could be it or not. We've just completed an ABCD in the market for the, if you'll pay attention here, to the market in the euro, and that's another one that looks real interesting there at that 116.40 level. That's down about 70 pips from the high. So pay attention to these folks, because these are going to be real interesting moves. Live every day in an attitude of gratitude, and may God bless. We'll see you all on the flip side. And make sure that you always protect yourself, because you're the only one that will accept that responsibility, folks. Nobody else is going to do it for you. May God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.